Hey, good morning, everybody. Welcome to the first day of August. And hope that you've had a great summer as the kids get ready to go back to school here shortly. You teachers are heading back into work today, and your summer is over. Hey, thank you for joining us today. Yesterday, so day. I think we had mostly red, slight tinge of red, maybe a little bit of mix. Hey, before we do that, though, let's not forget that there are so many things in the world we live that are not controllable by you and I. However, when it comes to your portfolio and your investments, you can take complete control by controlling the amount of risk you have in that portfolio. You need to know what that risk is. You need to know how much you should have there so that you can make the proper adjustments. Give us a call at 863-382-0037 to walk through our core retirement design, where we'll help you design the retirement you always dreamed of. With that, we got Dave coming up here next.
To talk about that actually of great is important. The record's just about over. It's 8:40 at your Light FM, and it's time to check in on your money. When we always go downtown to check in and see what Phillip Statler from Statler Financial Services is watching today, because quite frankly, my news ticker was kind of boring this morning. Phillip, are you more active than I am today?
Hey, we do have some earnings that have come through, Dave, and so we do have some stuff to talk about on that front anyway.
Well, that's good to hear, because the national news, basically everything comes up at 10 this morning. We're going to get the JOLTS job opening reports about 10, then a bunch of other construction and international business composite indexes coming out of Standard & Poor's. But early this morning, Monday and Tuesday, are relative doldrums before we start getting into that flood of employment reports starting on Wednesday. And tomorrow morning, we kind of kick it off with the private sector employment. And I'm kind of getting the feeling, looking at the market this morning, like the traders are kind of waiting to see whether or not employment is going to back up the notion that we aren't looking at a recession this year. Wouldn't you agree?
It definitely is. I mean, I think that we had a great July, right? And so I think now we look at what's August going to bring us. I mean, I'm looking at some numbers here. The Dow was up a little over 3.1%. S&P 500 actually ended up below 3 at 2 3/4 for the month, and the NASDAQ 100 at almost 3 1/4. Russell 2000, you'll like this, Dave, up 5.6%. So, not bad for a month. So we're looking good from that standpoint.
Absolutely, and especially during a month where generally the stock market is legendarily flat, because there's very little that generally goes on during the month of July. But this month it was a pretty good one. S&P, just to give people an idea as to where we're at, we're up for 5 straight months on the Standard & Poor's 500. It's up 19% year to date. Kind of makes you say recession? What recession, right?
Well, exactly. I was going to point that out too, that, we're up almost 19% on the S&P 500, and you look at the NASDAQ 100 and it's up 43% year to date. So some big numbers being posted there, which gives you some, to me anyway, some reason to think that it's time for a pause in some of those stocks and some of those indexes, because we've seen such a run up. And typically when you see that kind of run up, then at some point there's a pause and a little bit of a retrenchment before we start to move forward, if we get to move forward.
That would be the normal pattern, and it kind of addresses again the refrain I've been singing for a while. We're buying less profit for the most part year over year with the stocks that we're trading, and that generally means that while the multiples are going up, the stock values are going up, but eventually we're going to hit a ceiling. And my hope is, well, you say a pause. I'm hoping not a retrenchment, but at the very least somewhere down the line, when you talk about 19% growth on the S&P, while their profits are going down by 7%, my instinct is, okay, I'm happy with this, but let's not get into bubble territory here.
Well, exactly. We definitely would love to stay out of that territory, because then that, once you get to that bubble time, when it pops, it's not pretty. And so we'd rather have a little correction than a bubble popping.
Absolutely. And bubble pops generally tend toward being generated as much as anything by when the price starts overrunning the amount of profit you're actually buying. And right now, we're paying a premium price for the profit we buy. Although, while you and I are trying to calm, yell for calm a little bit, at the very least, Morgan Stanley was one of the biggest bears on the market. And last week, a guy named Mike Wilson from Morgan Stanley said, quote unquote, "We were wrong about a recession." And they're saying that the S&P right now, they're still saying it could conceivably end up at 3,900 for the year, and that's kind of planning on that retrenchment a little bit. But the recession, probably not going to happen, which is kind of reassuring coming from their research budget, isn't it?
It definitely is, Dave. When we can, because if we can keep in a slightly positive growth mode with no recession, that will be huge for our economy. I want to point this out. I just saw this article and I found this kind of interesting. Cardboard boxes, they're important, right? I mean, everything you get from Amazon, from almost anything that gets shipped to you comes in a cardboard box.
Oh, yeah, and your cats love them too.
Yeah, I bet. But so it's one of those things that gets tracked, right? That's
Mhm.
important to our economy. And so the headline is "Big Drop in Cardboard Box Sales Screams Recession." We've seen a decline in cardboard box sales by 9.8% in the second quarter, and 12.7% in the first quarter of this year. So that's a pretty big drop. As a matter of fact, it said that 12.7, that's the second biggest slump we've had since they've started keeping track of cardboard boxes.
Are we going to have to start tracking a new index along cardboard box sales now? Actually, it comes a little bit. I got to imagine a part of that has to be on the cost of fuel. I mean, we're looking at oil at $81 a barrel at this point. I know my Amazon shipments now, they're combining more and more and more of them into one box instead of having multiple things, and they're trying to encourage us to have everything delivered on the same day, so there only has to be one shipment. That probably is part of it, but it's an interesting sidelight at the very least, one more indication of things going in a sideways or downward direction in at least one segment, isn't it?
It is. It is. It's something that so it'll be interesting to see like retail sales, what that comes out later this month.
Absolutely. One of the other indications as to whether or not we've got a recession on the horizon is, unfortunately, what happens to the price of oil. And we've been sitting here saying we don't really know why the price of oil has been going up because nobody's really come up with a cause. But one of my tip sheets says that they say it's because traders now have given up their pessimism on growth, economy grows, globally. So they're starting to bid the price of oil up, assuming that we're not going to have a recession. Just one more indication that, well, I mean, we're conservative about the future, but at the very least, the expectation of not going into a major slump is something that's becoming conventional wisdom slowly but surely, isn't it?
It definitely seems that way. You don't see as much gloom and doom hitting the headlines. That cardboard box story, that was kind of the exception, but you don't see as much of that hitting the news wires as we did at one time.
Yeah, really. And as I said, there could be a rational reason for the cutback on number of cardboard box sales, too, just for shippers trying to combine shipments together into fewer boxes to conserve on the energy.
Well, that's true, and that just makes. I mean, from Amazon's standpoint, that just makes total sense, right? If I can only ship everything in one box, pay one fee instead of multiple boxes, which usually end up costing more money than the one single box, then I'm helping my bottom line.
No, absolutely. The only reason I do Prime, because I'm not a big TV watcher, is I figure that I pay for my Prime subscription inside the first 6 months of every year just because I'm saving on shipping costs. Because my shopping habits are always, if I can't find it locally, I'm not driving out of town. So after I exhaust the local possibilities, two punches in my Amazon app, and I've got boxes coming there all the time. Well, if they combine them all into one, it just makes good sense for them. And I would imagine that probably I'm not abnormal on that shopping pattern.
Yeah, you're probably right. I mean, that's true. Though recently I've been saying no, don't ship it on Wednesday. I want it on Tuesday. So
Yeah.
you know,
I'm one of those immediate gratification counts. I want it on Tuesday as well, especially since it's things like my nicotine gum and the like. Earnings season continues, and we had one major loser that's been a hot stock for the last couple of years. What the heck's going on with Zoom anyway?
You know, they they had a rough quarter this last quarter. And a lot of it's coming from a weak outlook for this next quarter, but they did beat on revenue by just I'm sorry, they missed on revenue, but their earnings were okay for this last quarter. But it's what's looking ahead. They basically have downgraded themselves in terms of the amount of revenue they feel like they're going to bring in this next quarter. And that's what's really hurting them this morning. They're down 19.7% for a $25 stock. That puts us down to $20.50 right now.
Correct. What was the reason? Just what we'd expect, the back to work trend, getting back into the office trend, or is there something else macro that we haven't been paying attention to?
I didn't see any, the report didn't go into that much detail other than a weak outlook for this next quarter. And so
Okay.
not sure why they think it's going to be a less of a quarter, but obviously they're tracking that.
Okay. One that came out last night that you and I talked about before we went on the air that kind of surprised me when you told me it was tanking again this morning was SoFi, the big their biggest positioning is student loan refinancing, with the Supreme Court decision shooting President Biden's loan forgiveness policy down. They had a good quarter, I understand, and then turned around and kind of started falling this morning, huh?
Yeah, it did. Based on the closing price yesterday. One of the analysts at KBW basically has put a new price target. And he increased his price target by $2 a share to $7.50, which still is 34% lower than where it is right now.
Yeah, they went up by like 20% after they beat the street and shifting loan conditions. They said personal loans are on the rise, and I gather that's just a temporal thing.
Well, at least that's what he thinks. So it's trading down 3.3% this morning.
Well, poop. Other indications we've got.
Hey, we do have a couple of, I'm going to say the big guy today was Uber. Uber reported their second quarter results. They did miss expectations for revenue, but they offered some good guidance for the third quarter. They hit two major milestones this quarter. They beat on earnings, though. This is important. I want to bring this out because they were expected to lose a penny a share. They actually made 18 cents a share positive. And that's one of the things the CEO pointed out, that this was the first quarter that they had a GAAP, that's how they report for general accepted accounting principles, operating profits, the first one they've had. So they're excited about that. The other thing that they had was the first quarter that they had free cash flow over $1 billion. So some good things there. They're trading up 1.2% this morning.
That may be a miniature version of the day that Amazon finally went profitable for the first time in eons. All of us went, holy crud, they made money.
Yeah, exactly. So they're excited about that. But a couple other companies report. Caterpillar reported better than expected earnings and revenue. However, they warned about this next quarter potential decline in sales and in margins. And so not hurting them this morning, though. They're still up almost 1.4%. And then we had two pharmaceuticals report, Merck and Pfizer. Merck reported their second quarter revenue topped expectations. They're being helped by their two main drugs, Keytruda, which is a cancer drug, and their HPV vaccine, Gardasil. Both helped. However, they did lose money for the quarter, just not as much as expected. And so they're still heading up today, a little less than 1%. Pfizer, they came in and beat expectations on revenue, but fell short on their earnings. So they missed. A lot of that's because of their COVID products continue to, not as many people getting the vaccine. So they're down about 1/3%.
I know they're one of the leaders in the antiviral, though, that every time any of us have gotten it, just made it go away in a heartbeat for me. I figured they'd probably doing real well with the antiviral drugs.
And it
Resetting
could
the
be just not right now, or not a
yeah,
big enough section.
and it wasn't as big a boom as the vaccine was, without a doubt.
Right.
Resetting the table, it was a modest to a good up day yesterday on Wall Street. Doesn't sound like we got it going this morning so far. 45 minutes early. What's the direction look like?
Well, we got red ink, and the red ink continues to grow. The Dow is down 100 points right now. That's almost 0.3%. S&P 500 is down 0.4%. That's $19. The NASDAQ 100 is down a little over 0.5%. The Russell 2000 is down a little over 0.6%. And then the VIX heading up 2.8% this morning. So a lot of red ink. As a matter of fact, other than the VIX, I can't find any green ink. You go to the other side of the coin, silver's down 2.4%. Gold back down below 2,000, down 1.25% to $1,984 an ounce. And crude oil down 0.7, thankfully, to $81.23 a barrel.
It's still in that zip code we don't want to see it, though.
Exactly.
Overseas markets, the Asian rim was a mixed bag overnight. The mainland Chinese markets off by a bit. Some of the peripheral markets, like the Korean market, did actually eke out some gains. Europe is evenly down across the board, sometimes as much as about 0.5% midway through their trading day. Getting a retirement plan at any age counts. You may not have enough risk in your portfolio if you're young enough. If you're old enough, you may have too much. That takes a pro to look at the eyes. How do I find you to get those eyes on my portfolio?
You're exactly right, Dave. And that's why yesterday's report Fidelity put out said 37% of baby boomers have too much equity in their portfolio. But how do you know? That's why I created the core retirement design to help you pinpoint what your risk is and what your risk should be in your portfolio. Give us a call at 863-382-0037 to schedule your core retirement design, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again with a snapshot tomorrow morning, and hopefully some green ink by then. Phillip, I'll see you at that time. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, folks, thanks for joining us today. Hope your week is off to a good start. I'll talk to you again tomorrow. Take care.